Hey everybody, this is Chapelle, the South Jersey real estate guy working with Weichert Realtors in Cherry Hill. And today I want to talk to you about private mortgage insurance. I want to talk to you about what it is, how to avoid having it, and also if you have private mortgage insurance in your mortgage right now, how to get rid of it. So stay tuned. So private mortgage insurance, or PMI, is an insurance that the bank requires the borrower to buy and to kind of protect their own investment. They are going to be loaning you money, and in case you default or are unable to pay your bills, they can cash in on this insurance policy to protect themselves so they can recoup their finances. You say, well, what's the big deal on that? I mean, does it hurt me? How's it help me? Well, PMI can go anywhere from a few $100s a month to $1,000 a month in extra mortgage payment because you don't have enough cash to put down. The bank's kind of fronting it for you. They want to make sure they get it back. So they're going to bill you every month for that. And it's kind of like a credit card. That does not go toward principal. That does not pay down your debt. It's still just going to be a payment you make every single month for as many years as it takes for you to get your house value at 80% or your loan value to 80% of the home's purchase price. Without that, it's kind of like being stuck. And a lot of people feel like they're being trapped in this PMI prison that they can never get out of. Some people have owned their homes for 5, 6, 7 years. They're still paying this insurance premium of several $100s a month that does nothing for them. It does not pay down their debt. It does not really protect them. It's only protecting the bank. And so PMI can be a real detriment to your finances. So you may be asking yourself now, here I am, I've got this mortgage, I have PMI, and I did not put down 20%, so I know I'm paying it. Do you know how much you're paying? It'd be a good idea to contact your bank, ask them, how much am I paying in PMI every month? It may shock you that so much of your mortgage is actually going to pay for the bank's insurance policy to protect themselves. It does nothing for you. It is not protecting you at all. So sometimes you'll feel stuck, like, man, I'm in this prison, this PMI. How in the world do I get out of it? Well, I'm glad you asked, and that's what I want to share with you right now. So one thing you can do is pay down your principal quicker by adding a couple of $100s a month to your mortgage payment. If you can afford it, that extra money that you pay goes directly to your principal, which builds equity in your home quicker. The faster you can get to 80% of your home's value, the faster you can get rid of PMI. Another thing you can keep an eye on is your interest rates. Interest rates, if they go down, and right now we're right around 7%. So I understand that a lot of people feel that's super high, but I can remember a time when it was a whole lot higher than that. But we also remember the times when you could get loans for your home for like 3%. And one occasion, my wife and I had a 7% mortgage rate, and our credit was good, and we qualified for a better rate, and we refinanced our house. We took what we owed on the home, and we refinanced it. And we refinanced it at a lower rate. And I'm going to tell you, the rate was right around 3%, 3.25%, I think. And our monthly mortgage payment on a 30-year mortgage, when we refinanced, we were able to refinance our home and lower our interest rates to the point where we had equity in our home, and we were able to have a monthly mortgage payment on a 15-year mortgage lower than it was on our 30-year mortgage. And we got rid of PMI at the same time. So one thing you can think about is watch interest rates in your credit score. Sometimes you can get a better rate, which would lower how much money you're actually borrowing if you could refinance. So if you have some equity in your home, that might be a good idea. And by doing that, you might be able to get rid of your PMI. Now, for you South Jersey people, if you've owned your home for more than 3 years, I would say between about 5 years. If you've owned your home for between 3 to 5 years, there is a good chance this next strategy will help you get rid of the PMI on your current mortgage. Property values in South Jersey have jumped dramatically. And because of that, when you bought your home, if you bought it here and they said, here's what your appraised value is, you didn't have enough cash to make 20% down payment, but now in today's market, your home value is here, but your mortgage is down here, less than 80% of the home's appraised value. What that means is that difference right there is enough for you to be able to get rid of your PMI. So you can call your bank and say, I would like to have my home reassessed because I think my property value is worth more than what you said it was 5 years ago, and I want to get rid of the PMI. And I'll be honest with you, a lot of people here in South Jersey who are still paying private mortgage insurance for the bank every month could get rid of it if they just take this one step. Get your home reappraised and go to the bank and say, I want to get rid of the PMI on my mortgage. So I want to go back and recap what we've talked about. PMI, or private mortgage insurance, is required for people who put less than 20% down on the purchase of their home. Whatever the home's value is, you got to put down at least 20% or you're going to pay PMI. Second thing, PMI does not protect the borrower. PMI protects the lender or the bank. In case you default, they cash in this policy to cover their investment. That's it. It will not help you. It will not keep you out of foreclosure. PMI is going to affect you when it comes to how much cash you have to pay every month for your mortgage. PMI can be like 0.5% up to 1.5% of your monthly mortgage payment that goes directly to paying this premium for the bank. That's a lot of money. Hundreds to even thousands of dollars are going to be spent every month for you to pay for the bank to have an insurance policy in the case that you default. Another thing about PMI is that it will automatically terminate once you reach 80% of your home's purchase price. Once you get there, the bank is required to cancel the PMI insurance premium. So I gave you some pointers to think about as far as how to get out of it earlier, so you're not paying for 10, 15 years PMI trying to build equity in your home. I hope this video has helped you. This is something I did not know when I bought my first home. I honestly had no idea. And I remember the first time a banker told me that I was spending about $200 to $300 a month. It was between $200 and $300 at the time on private mortgage insurance. I asked him what that was for. And when he told me, I was furious because I had been paying for at least 4 years on it. And it had built no equity in my home. And when I had the opportunity to get rid of it, I watched my monthly mortgage go down. And because of that, it helped me free up some cash so I could pay other bills, other debts, and try to become more financially stable. And so I hope this video will help you to acquire some of this knowledge so that it helps you as you move forward. Again, this is Eric Chapelle. I'm the South Jersey real estate guy. I'm glad I could help you. I can't wait till we talk again soon.